Hey guys, it's Sean. Hope you're doing really well. Today I wanted to just real quick share with you a concept I've been kind of getting deeper understanding of over the past year or so, and I think I'm really kind of excited to talk about it because it's a really powerful concept, and it's one that I really rarely, like I've basically almost never seen anyone talk about it, and it's the two types of gaps. So starting out is the first so you're making trades, and I'm going to show you guys examples today with futures and crypto, not crypto, just standard currency leverage contracts and all, and also commodities. But normally, right, if you're trading momentum stocks or you have big gaps in a company, a good example that comes to mind is Flowers, right? You have this company that, or even Vox is a good example. I was looking at this, my buddy told me about this. I was like, why didn't you tell me about this earlier? You have these huge gaps, and they're much easier to see on the intraday or but if you look, you can see these big moves where they got gaps between the days. They got gaps between the days. Same thing here with Flowers. If we look here at the daily, we can see they've got gaps here. Gaps in between the days. Gaps in between the days. Very common momentum principle is gaps. But what's not a very common momentum principle, what's not taught enough, is the two kinds of gaps. And the first kind of gap is the one that starts a movement. And the second kind of gap is the one that ends a movement. And usually these aren't going to be like the extreme top or the extreme bottom of a movement. They're not going to be like hammers, but they're going to be incredibly strong indicators of the start or end of a movement. So here with Flowers, this gap right here is a starting gap. It's at a very low point, so the stock is going down and down. And then it had this gap up, and that was the start of a big movement. And now it just had this big gap down on this one day, and I've been kind of short on this as a head and shoulders. And now you have this big gap down. So I longed it. I've actually traded Flowers so much, I probably made like 50 trades on this in the last couple of years. But anyway, there's one example of an initiating gap and then a finalizing gap. So this is where you would ideally buy, or I kind of would rather buy down here, but this would be confirmation of your buying, and then you would ideally sell based on TA. You can do like head and shoulders, second shoulder. You can do I don't know. I would kind of do like this. You get the execution of it down to get the top or the bottom, but the confirmation comes from the gap. Same thing here with Vox, right? So this was a long-term W setup. You got your first bottom here, and then your second bottom here, and then you see this gap, right? This gap right here, you got gaps between the week, and then of course between the day, and that's when you really, I think it's more so the week with Vox. It was more of a weekly setup. These initiation gaps at the beginning initiate the movement, and then it's still got pretty strong momentum, so I don't know, I'm waiting for it to kind of gap around a little bit more to figure out where the top's going to be. I'm not 100% sure where it's going to be. I mean, that really gets into the range of like Bollinger Bands and percent B, but besides the fact. So really famous trade that I did earlier this year was shorting WTI crude. I shorted here at 29, and then this is a different chart from Trader's Way, but just pretend that this is a chart where it shows it actually going to like negative 37. Oh my god, just an amazing trade. I absolutely love it. And one of the biggest things behind that trade, is, besides this really weird rally for like literally no reason in the middle of the pandemic, was this huge gap right here. This is an initiation gap, and the reason why is because it's not so usually you have initiation gaps kind of at the top, but this was a medium range initiation gap, and that makes it even more powerful because after that's this huge gap, it keeps going down. And so I didn't initially short it here because this could have been a bottom, but it wasn't, and that was proven by making a new low, right? So then I shorted it here. That came back to the MAs, and then everyone knows the story with oil. But the reason I wanted to make a video on this is because something came up very like today with Euro Troy. So let me see where my charts are. So here's the 4-hour, which is great, but let me pull up the daily or the monthly. So this is really what I was interested by. So this is the monthly on Euro Troy versus US Troy, which is the more popular pair. These things have crazy spreads. But you've got this, what happened was really interesting. Here's the daily. There was this huge period of decreased volatility, and then it just spiked up, and it broke out, and it has done absolutely incredible. I mean, it's moved, 30,000 pip. Really impressive. I mean, just really impressive. But I'm trying to figure out like when this thing's going to stop going out, so I know when to exit, I know when to start, getting into shorts. And then I saw this huge monthly gap that just happened because it closed last week like here. This is where, and then it opened like way above. It had this huge drop on the 4-hour. And so this is not going to be like the exact perfect top, maybe because it has a lot of momentum coming behind it. But this is one of those gaps where like this is more of a finalizing gap, and now you want to be looking for confirmation of a reversal. And so there's one other nuance that I want to talk to you about, and that's directional bias. So I had this trade in US SGD. This was just a couple weeks ago. And I had bought it on the bottom here, a W here, going up, and then an overarching W, and then a W here. And so I bought it right here at the bottom of this candle, and then held it here, and I didn't close it before the weekend, which was like, I don't know, a weekend vol I thought wouldn't be that bad, but it definitely was. And it had this huge gap. I know this doesn't look like a big gap because this is a 4-hour chart, but this is an incredibly large gap. This was the equivalent of like 66% of the position at the time. So like huge gap as the next week begins, and even though the gap was down, in the end it went up because that was just it was a really good support line. And I know you can't see it on the 4-hour chart, but on the 1-hour it had really nice consolidation for like a couple of hours, and there was a really clear bottom here based on hammer candles. Then it completed the W, and this was like a really cool. This is like a 25x trade. It was really great. But this gap right here was unexpected, yeah, but notice how the gap went down. It gapped down, but it was actually still a bottoming gap. And then up here at the top, you can see the end of the movement. You can kind of tell also by the double top M. This is when I outed it and started getting in shorts, which did the exact same thing. And then it did another W, which is even crazier. But you see this gap right here on the week. The gap is down and the gap is at the top, and that gap is going to be your finalizing gap. So when you're making trades, it's really important to remember there are two types of gaps. There are initial gaps and there are final gaps. And that it happens. I've seen it so many times on like 1-minute day trade stocks. It's just an amazing technique. I never really differentiated gaps. I always thought, wow, it's gapping up. That's got to be great. Just buy. But there are also really great scenarios where you can see gaps down and really intelligently link the two on a more swing tradey basis, especially with higher leverage, and you can make some really killer trades based on that. So yeah, maybe this will hammer. I don't know. This thing's crazy. Like I said, it's got really big spreads. But yeah, guys. So I hope you got a ton of value from today's training. I hope that you now understand that there are two kinds of gaps. There are up gaps that start a movement, and there are down gaps that end a movement. I'll tell you what. I haven't actually looked at Tesla to see if this happened with them, but I think this would be one of the kind of last examples of a really high momentum mover. Where you have gaps. Let me get rid of these Bollinger Bands. And here, looking at the weekly, maybe the daily would be better. I'll take a look at both. Yeah, so you got the daily. It's kind of harder to see, but I'm just going to use the weekly because it's easier to see. You got this gap here, and this gap gets confirmed by more upward movement. Here's an initiation gap, right? Whereas here you have this gap here that's confirmed by more downward movement. But then there's another gap here. So you got like a double gap. You got a reversal downward movement gap. But then you have another gap here that confirms the end of the reversal and into the uptrend. So you really want to look for gap pairs, right? So you have a pair that starts it, pair that starts it. Then you want to see, is this going to be the gap that ends it? This one is this is a huge gap. And yet it still had the momentum to continue. So that's going to show a lot of weakness coming into this next movement. Because you already had this big gap down here, that could be the finalizing gap, and it's not like it doesn't take effect immediately, right? It's sort of a little bit of a delayed lagging indicator, but it's something that you really want to consider because now that they're breaking out of this trend line, that gap, that big finalization gap, is kind of ending this initialization gap, and that's going to really show some pretty bearish tendencies. And so look for pairs of gaps. You want initiation and finalization gaps. That's really the key here. So yeah, thank you guys so much. I wish I knew this when I was learning about gaps. I thought it was just look up the best pre-market gainers and just buy on the gap. But there's actually a little more intricacies, especially to it, especially when you look at doing swing trades with it. But also, obviously, I guess with 90 noon trades, you got the same kind of thing. BLRX, you're gonna see the same thing on these other time frames. I got these old trend lines on here. I love them. But yeah, you got the gap up, and then usually with 90 noon stocks, I rarely see a gap down, at least on, because you're looking at such a short time frame that there's not really time for there to be a gap. So this really applies, the whole linking of beginning and finalizing gaps, it really applies more so on the intraday, like multiple day charts, and especially weekly charts, monthly charts. The stronger, obviously longer the time span, the stronger it's going to be. I remember, there was this one time when this blockchain, what's the company? I swear. I can't believe I forgot the name. I literally own this stock, Riot. Okay. I remember there was this one time Riot had this big gap right here, and it looked like it was a downward gap, but it was actually a bottoming gap that was the start of a huge uptrend. So when you see a lot of consolidation after a gap, ask yourself, is this like an undervalued play right here? Or is this one where there's going to be a big upward gap? So this would be an upward gap to start a move, and then another upward gap to continue it. But it really, you kind of get a little bit of experience trading it, because this consolidation range here is where all the money is determined. Like either you know that you're going to win or you're not based off the consolidation range. And here's one of those examples where it gapped down, had a bottom consolidation, and then started making new highs. And that's when I really started buying in. I started buying in sort of more around here because it had confirmation that it was going to come up to this gap level, beat it, and then start an uptrend. That uptrend was confirmed by Riot, is the one that likes to have double gap ups. It was confirmed by another gap up. And then a gap down here kind of finished it up. It's going to kind of enter into an M, and it looks kind of bearish, just a little bit. We'll see what happens with it. So yeah, really cool to see that. Another example of a company that has like double confirmation gaps and continuation and gaps is Intel. This is really more fundamentals based though. All the other examples we've looked at are much more technical based. Intel is much more fundamentals based. These gaps are just based off crap earnings. So you want to be able to differentiate between bad earnings, which, by the way, awesome head and shoulders setup, I'm just saying. But this right here was a hard call to make. I know a lot of people that lost their asses right here because they were buying long into it. And so that was more of an earnings play than a gap. So you want to be able to differentiate, especially with these bigger public companies. But in terms of like futures for currencies, you're not really going to have to worry about this. So it makes it a lot easier. Alright, cool. Well, thank you guys so much. I hope you get a ton of value from it. Go out there, apply it, absolutely crush it. And trade gaps like they are meant to be traded. Thanks. Bye.